Let no feeling of discouragement prey upon you, and in the end, you are sure to succeed. Abraham Lincoln. President Lincoln succeeded in holding the country together through an incredible bloodletting. Over 600,000 American lives were lost. But he continued to let no feeling of discouragement prey upon him. And he succeeded and saved our country. And guess what? In our lives, we can do the same thing. We can continue to push ahead knowing that we will achieve what we set our minds to. We are gifted with that from the good Lord above, and I am a true believer that anything that man can conceive of, he can accomplish. And if you want to accomplish learning how to read these stock charts, learning how to track the price movement of stocks, ETFs, whatever it is, up and down, you can do it. We show it here every day. Weekly vertical crossovers, that's the big key. Those trends. Got some great training for you. This is day 2, part 2 of our options training. For those of you who are signed up, just go to chartingwealth.com, sign up as a daily member to receive the reviews. It's for free. You will get all the special trainings. We are in part 2, Options Made Simple, Understanding Options Pricing. And remember, tomorrow, that is for the Wednesday show, you will have part 3, which is the most key. That is putting the rubber to the road when it comes to options. I think we have the best options training on the internet. It is simple, direct, clear, gives you the ability to start practicing it. But what do you have to do anything in our world? You have to be able to chart stocks accurately, and that's what we're getting into. We see stocks and bonds up for the day, gold down. I'm so thankful because that is where I am right now in that put trade on gold, and I'm hoping it will continue. How many of you are in practice trades on gold? How many of you are still in practice trades on the S&P and the Qs? What about 20-year bonds? Well, let's look at the S&P first. What do we see when we first glance at our weekly chart? We see a weakening, of course, going into the second week. We had everything. In fact, it was getting better and better and better. The reason I'm calling that for the folks that are listening to the podcast, not watching the video, we can see from when the weekly vertical crossover occurred on the 8th of May, that Friday. Remember, all weekly vertical crossovers occur on Friday because Friday is when that candle draws. So we saw that next week a little shaky. Then what did we see each week? We saw a tick up in the angle of the price percent oscillator until the week ending the 5th of June. That next week ending the 12th of June, we saw things lose their edge. They dropped down. We're about the same angle we were as this week starts off. As far as the price percent oscillator goes, derivative oscillator peaked back on the 5th. That's why we saw that angle come off. And now it's devolving. We had a red spinning top on the week ending the 12th. That means a slowdown in the up movement, indecision tending down. So far this week, we see a red down candle forming. Now you might say, wait a minute, Tom, this was an up day. What are you talking about? That is what our Heikin Ashi average pace candlestick is showing us. What is a Heikin Ashi candlestick? Well, you'll see a video at the end of this one. I'll link to it so that you can understand Heikin Ashi candlesticks better. We can see them dropping through the red signal line. Now, again, that's not dispositive for us. It's a warning bell. What's dispositive, of course, is what the price percent oscillator is doing. It's still moving up, but we have warning signs about significant slowing down in movement. Derivative oscillator also losing momentum. What about the 2-day chart? Well, we had a strong red down candle representing Thursday and Friday of last week, and so far, first day of this one, another warning bell. What have we done? We've penetrated on the 2-day chart, the weekly trend line. We've already dropped through the 2-day trend line. So even though it was an up day, we're seeing lots of weakness in the S&P 500. I haven't had the crossover yet. Now, that is a death knell when that 2-day chart closes crossing over the red signal line. Has not happened yet, but definitely losing energy. Price percent oscillator going down, derivative oscillator dropping precipitously, and we see the getting close to a crossing over on the 2-day chart. Now, will that happen? It's a big down day tomorrow, possibly, but again, we are just seeing a lot of weakening in the S&P. Doesn't mean that it won't tick back up again. It could. But again, look at the last time we had a red down candle forming. That was back in the bad time, wasn't it? When we had that weekly vertical crossover going down back on the week ending the 28th of February, followed by 3 big down candles and then a solid green down candle. It was a slowdown in the down movement. That's where we hit the bottom of bottoms. So again, we're paying close attention to what is going on. Now, what do the Qs look like? They were up 1.22%. Even they're giving us a bit of a warning sign starting the week off. Now, this is just the first day of the latest weekly candle, but look at it, pushing through the what had been a beautiful trend line going up for 6 weeks of up movement. Now we see a penetration of the weekly trend line. Also, price percent oscillators lost some energy, still heading up nicely. Derivative oscillator losing momentum. So again, we're just watching, waiting, paying attention. Look at the 2-day chart. Again, red spinning top, the last 2-day candle representing Thursday and Friday of last week. And again, a down candle pushing through the 2-day trend line, touching the weekly. So again, real weakness here. If you're still in the Q's move, pay close attention to where things are going. And of course, look at the 4-hour chart. Peaked back on the afternoon of Wednesday, the 10th of June, down Thursday, down Friday, down in the morning and popping up in the afternoon. So again, watch things. We popped all the way down on that 4-hour chart, touching the weekly trend line, popping off of that, going through on Friday afternoon, the 2-day trend line. So again, we're seeing lots of weaknesses in stock. Now, what are bonds doing? Well, bonds were up for the day, but just barely. 0.06%. Look at that price percent oscillator, still heading down. Look at the weekly chart. We see it, however, pushing up above the weekly trend line. So that's interesting and of note. Derivative oscillator, nonetheless, is still gaining downward momentum a little bit. Price percent oscillator, not at the same angle. It's losing momentum going down. And again, we're paying close attention to what's going on with the candle there. We go to the 2-day chart. What do we see there? Well, we see, again, topping off about the same point first day of this latest 2-day trend line as it did back on the Thursday, Friday candle, right there above the weekly trend line, just pushing above that. And again, up 0.06% for the day. And again, we see a loosening of a reduction in the down move. And we see that price percent oscillator heading up. So we're paying close attention to that. What about the 4-hour chart? Again, it hit its top back on the afternoon on Thursday, really sliding sideways, and that down movement lost energy in the afternoon after gaining it in the morning. So again, we've got, as you can tell, between stocks and bonds, we've got a lot of iffiness there, a lot of weakness in both the down move in bonds and the up move in stocks. So what's happening? Well, we'll watch. You know what? We don't have to trade. Unlike the people on Wall Street who are forced to make trades, we can keep our powder dry and wait until things tell us exactly what's happening. Now, where do we go in gold? Interesting. We're going to start off first on the weekly chart. What do we see there? We see a green spinning top, almost a doji forming. It's got a wick on top, a wick on the bottom, and a very small body so far. We do have good news that the price percent oscillator is pulling away from the red signal line. Now remember, all things being equal, the one thing we pay the most attention to is what's happening on the weekly chart with the price percent oscillator on all these charts. And what do we tell you to do every Wednesday at the close of the market? We tell you to put everything out of your head, just clear your mind, go to the weekly charts, and then go through the stocks and ETFs that you are tracking and see what just the weekly chart is telling you. Write it down. Use that as the thing you focus on. That is the most important. And to do that midweek, extremely important. Doing it at the end of the week's a little late. You don't know where the next week is going, but when you're in the middle of the week and you look at those things, so critically important. Helps you get ready for weekly vertical crossovers too. So we see the price percent oscillator pulling away from the red signal line, derivative oscillator gaining downward momentum. All right, that's decent. Again, even with that sideways slide, it was down for the day. 0.18% was down a lot more during the day. Look at the 2-day chart. After 4 days of up movement, we have a red candle forming. Now it's got a long wick on the bottom, little wick on top, and the price percent oscillator, which had been moving up until the 10th and then flattened a little down through the 12th, is now starting to move down more. Is it going to penetrate that 200 period moving average line? We'll see. Derivative oscillator losing downward momentum. But again, that all-important price percent oscillator heading down. And we go to the 4-hour chart. Again, big down in the morning, somewhat of a recovery in the afternoon after the last few days of tracking up. So again, price percent oscillator is flat. Derivative oscillator losing downward momentum. This is on the smallest of our charts. So we will pay attention and see how this continues to go. So a lot of indecision and flux in the marketplace trying to figure out which way it's going to go. So again, keep our powder dry. We'll pay attention. We'll let the price percent oscillators continue to lead us with caution. Folks, that's where we are as we end the day. If you have not already contacted us and are interested in the Accelerated Market Mastery course, you need to call us. We keep having folks sign up, approving folks. I do a personal interview with anyone who is interested. Want to talk to you, make sure it's right for you before we sign you up for it. I want to have a good crop of students. I'm very excited about all the people I've talked to so far, whether you're in Europe, whether you're in the States. We can't wait to talk to you. So if you're interested in taking what is typically, I would say, a 5 to 10 year project, really learning how to become a marketing master and speeding that up, learning how to chart, learning about options, and learning about setting up your own virtual personal wealth fund, that is really where we come to in the end. Everything is about that. I don't talk about that a lot on the show. We talk mostly about charting, throw some options in there. But of course, you've got to chart before you can do anything else. But the main goal of where we get to in the end, is not being day traders or an option here, an option there, buying a stock, selling a stock. We want you to practice all those things. But where we want to get to in the end is helping you figure out how to truly practice what's going to count the most. And that is setting up your own private wealth fund, which is like a mini hedge fund that you've learned how to fill with ETFs and stocks, how to manage, how to pump. That is, use the printing press method, selling covered calls and puts if it's something you're going to hold on to, whether through warnings or earnings seasons or stock splits, writing things up, and again, depositing the proceeds of your virtual trades into that account, seeing how you can actually grow and manage your own virtual, private, personal wealth fund. That's what it all comes down to. If you really want to practice what's really going to count, that's where the rubber hits the road. And that's where we go through over the next 3 months of our classes that we teach on the Accelerated Market Mastery course. It's not for the timid. You don't need a PhD. You don't need a degree in business. In fact, some of the best traders I know are folks with high school diplomas that have common sense, some horse sense, and determination and dedication. That's what you need. You can't overthink this stuff. You've got to trust what you know, and that's what we teach you how to do. Okay, we're going to now leave those 4 ETFs we track every day. For those of you interested, we're going to jump quickly into what's happening with Bitcoin, real estate, and oil. We see Bitcoin down for the day 2.75%. And again, Bitcoin sort of topped out. It topped out all the way back on the week ending the 8th of May and has really just slidden sideways since then, starting the week off with a red down candle. Haven't seen a solid red down candle since the bad drop, the bottom in Bitcoin, going down to a low of $5,118.94 from a high of $10,323 back on the 14th of February. Are we going back there? I hope not. But that's what we see happen. We see a down move on Monday, the first day of the week. Derivative oscillator losing momentum. It's been losing momentum since it's topped back on the 5th of June. So this is going into the second week, and the price percent oscillator is heading over. Doesn't mean it's going to stay that way all week, but that's what it's doing now. And check it out. You may have a crossover going down by the end of the day on Tuesday, first day of the latest two-day candle. That's not a good sign after all this sideways slide to have it finally cross over going down. Price percent oscillator trying to cross over along with the derivative oscillator. When they both cross at the same time, typically means that's going to go on for a while. 4-hour chart's been heading down since the afternoon on Monday the 8th. Slid sideways for quite a while and then really started progressing the last 2.5 days. So that's where we are on Bitcoin. Not looking that great right now. Again, we'll see. Now, it would be nice if the two-day chart crossed over for a little while and then turned back around and headed up. It'd give you a two-day recross to jump back into an up move, but who knows where Bitcoin's going. Not looking too good right now, but it's just the first day of the latest weekly candle. What about real estate? Vanguard, Real Estate Investment Trust Exchange-Traded Fund, the largest one in the world. We see up for the day 1.41%, but that doji starting off is a red spinning top. So not super positive, but the price percent oscillator is rocketing up nicely along with the derivative oscillator. That's looking good. Two-day chart. We can see that the full latest two-day candle representing Thursday and Friday was down. This, however, is a solid green, so that means a slowdown in the down movement. Candle has a little wick on top, longer wick on the bottom. Price percent oscillator is about flat. Derivative oscillator losing momentum. And then we go to the 4-hour chart. What do we see there? See it down in the morning, popping up in the afternoon. So we'll continue to pay attention to what's happening with real estate and see just where it is going to go. Again, we've had that crossover, but we see some weakness and hesitation as the week starts, and we'll continue to watch and see if indeed that two-day is going to start gaining some momentum and really start heading back up again. Pay attention to that 4-hour chart. Could give you a recross for some more up movement, but remember that 4-hour chart is always the weakest of all of our charts. But again, if it takes off with some real luster, you might check it out and give it a practice trade. Okay, lastly, we go to oil, up 2.08%. Oil just hasn't crossed over yet, going up. Derivative oscillator gaining upward momentum. That price percent oscillator is heading up. We do have a red down candle forming, but pay close attention to that weekly vertical crossover that could occur by the end of the week. Hasn't happened, but again, price percent oscillator's heading up. The two-day chart is showing us some weakness. It had headed up for many days, and over the last few days heading down, red down candle forming, even though it was up 2% for the day. What about that 4-hour chart? It showed down movement in the morning, recovery in the afternoon. Keep your eye on that. That 4-hour chart crosses over going up strong. Maybe that'll be enough energy to pull that weekly chart on through, give you a crossover, and maybe some hope for oil. We'll wait and see. Folks, that's where we are as we end the day. Always love having you with us. Please make sure to take that special training in your show notes. Second part of Options Made Simple, the Charting Wealth Way. God bless. All the best from the whole team at Charting Wealth World Headquarters. If you're interested in the Accelerated Market Mastery course, all you got to do is email us, cw@chartingwealth.com. Be sure to include your telephone number. We'll get back with you, set up a time to conduct an interview to see if it's right for you.